Good morning. You're watching Business World Live.
Businessworld.
I'm Annie Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. The economy is poised to lose 3 billion pesos per week. That's on the back of Metro Manila's shift to alert level 3.
Local stocks are seen to remain volatile as COVID-19 cases continue to climb.
With at least two companies scheduled to debut on the local bourse this month, the ongoing virus surge is clouding the prospects for upcoming IPOs.
And an expert believes the Omicron driven surge across the world may be the tipping point for COVID 19. We begin our broadcast with a bleak forecast following the imposition of tighter curbs in Metro Manila and nearby regions.
Economic managers say the economy stands to lose at least 3 billion pesos per week due to the escalation to the more restrictive alert level 3 in NCR, Bulacan, Cavite, Laguna, and Rizal. These areas will remain under the alert level 3 classification up to January 15 as the country battles a fresh surge in COVID-19 infections. The Development Budget Coordination Committee, or DBCC, says it continues to monitor the impact of the spike, but it says the country is now in a better position to manage a surge in cases given the increased vaccine rollout and hospital capacity. The cabinet level body says the revert to alert level 3 delays the government's goal to place alert level 1 in Metro Manila within the first quarter, but says such delay is only a temporary setback. The DBCC also said this year's record 5.02 trillion peso budget would serve as the country's main fiscal stimulus. Meanwhile, the government has borrowed $800 million from multilateral lenders to fund the rollout of booster shots. The finance department said the government borrowed $250 million each from the ADB and the Asian Infrastructure Investment Bank last month, while another $300 million loan deal was signed with the World Bank also in December.
Now, still on the ongoing surge, the country logged more than 28,700 cases just yesterday. This is now the Philippines' highest daily number of infections since the onset of the pandemic. The new infections pushed the country's caseload to more than 2.96 million cases, with some 128,100 cases still active. The virus killed 15 more individuals as of Sunday, pushing the nationwide death toll to more than 52,100. Total recoveries are now at 2.78 million, with over 2,500 new survivors just yesterday. Now, Octa's Guido David, however, noted that Metro Manila may be reaching its peak in terms of the current surge. David explained that the slight increase in positivity rate may be seen as a slowing down of the uptick in cases in NCR.
And amid the rising COVID-19 cases in the country, Malacanang denies rumors of a total lockdown. Acting Palace spokesman Carlo Nograles urged the public to dismiss unfounded and malicious rumors and said that spreading unverified claims only contributes to needless panic. Citing the Agriculture Department, Nograles also assured the public that the country has enough inventory of basic commodities to last for the next 3 months. But infectious disease specialist Ronjin Solante admits moving Metro Manila to a higher alert level might already be a necessity. As of now, NCR and nearby provinces are under alert level 3 until January 15. All right, Dan, the index saw its worst start to a year since 2016, and it does not seem like that anxiety will be stemmed anytime soon. What is it looking like at the open?
All right, let's take a quick peek. And unfortunately, some more doom here, down 0.5%. We have broken below the 7,000 levels just this Monday morning, 6976.46. And of course, this follows what you said. Last week, we were down a third straight week, but we were still above 7,000. We were already down by 1.6% in the first trading week of 2022, amid, of course, the resurgence of COVID-19 cases. And we already were below the 100-day moving average. And this is actually something that investors had been expecting. Jonathan Ravelas, chief market strategist at BDO CEO, said the market is exhausted and lacks conviction. He even projected that we could pull back to as low as 6,500. Analysts had already predicted this crash below 7,000. And they did mention that we will continue to bear the brunt of this Omicron driven pessimism and, of course, the possibility of alert level 4. However, the good news is that at these levels, Unicapital says the PSI's 12-month forward PE is just very low right now. Let's take a look at that. It's falling below 15 times already, and this is what he says might be actually the conviction that the market needs to start bargain hunting. There might be buying opportunities in the coming days. But if we take a look at our airline players here, of course we have PAL. It's still on a trading halt as it files for bankruptcy, but you do see Cebu Pacific nevertheless jumping 1 and 3 tenths of a percent. This despite, of course, all of these cancellations, schedule adjustments. We had already reported that Cebu Pac had preemptively canceled some flights until January 10 as their manpower is on quarantine. But another one, of course, PAL has already said this, according to Lucio Tan, their chairman and CEO, some cancellations and schedule adjustments are likely. Many people, employees, not just the air crew, but really the ones in the ticketing offices, the ones in the contact centers, the support teams cannot report to work. And of course, this follows what Health Undersecretary Maria Rosario Verger said. COVID results are taking longer and longer to be released due to the high demand. Now, here to chat with us this morning about how the outlook will be for the rest of this trading week, we have with us Japheth Tantianco of Phil Stocks. Good morning, Japheth, and welcome back.
Good morning, Ma'am Danny. Thank you very much for inviting me on your show.
All right, Japheth, I wish I could greet you Happy New Year, but it's been quite topsy-turvy. As you know, the index sliding as predicted below 7,000 levels. What is driving this? We've already had this surge in the first week already. A lot of of these issues had already been coming. Why hadn't this been priced in, and how much lower is this going to go?
Well, with respect to the market, right now it's already below 7,000. I believe investors are pricing in. They are pricing in this ongoing developments with respect to our COVID-19 situation. Cases are surging, and sadly, it has already surpassed the Delta surge. So that's one. Another thing is that more cases with the Omicron variant in the country are being detected. So this strengthens the possibility that the said strain could already be spreading throughout the country. And finally, of course, investors are pricing in the losses that the economic losses being produced by the NCR Plus being placed under Alert Level 3. The economic managers have already mentioned that for every week that the NCR Plus is under Alert Level 3, we are losing 3 billion pesos in terms of gross value added. So that's something that investors are pricing in right now. And then at the same time, you still have these noises from offshore, particularly the stance of the Federal Reserve, where in its latest minutes of the meeting, it mentioned that this year there's already that big possibility of monetary tightening from the finishing of the tapering. From the finishing of the asset purchases to the raising of the policy rates to the balance sheet reduction. So these are things that investors are pricing in. But if you're going to look at it, value turnover is still low, meaning to say that there's not much participation in the market. So many are still on a wait and see mode. As to what they are waiting for, they are waiting for when will this surge end? Is it
Mm-hmm.
going to climb further? If so, if we surpass the level that we saw today, then there's really that possibility of a decline, a further decline in the market. At the same time, investors are waiting for the next steps with respect to the social restriction measures in the Philippines. Right now, there are already talks. There's already the possibility of NCR being placed under alert level 4. And take note that this is the biggest contributor to our economy. Investors are waiting for what will the government's decision will be with this one. If it does, escalate to alert level 4, then yeah, we may see a further decline. It will add downward pressure to the local force.
Okay, but Shafit, we've been seeing how Omicron has behaved in other parts of the world, and it does seem to be the case that it's less severe. A lot of countries are lived with the virus already. There were some lockdowns in Europe, but then now they're parang easing it up na rin, di ba? And
Mm,
then in the Philippines, we have boosters being rolled
mhm,
out, and we have vaccinations, and also the, of course they're saying do not dismiss this. It's still of course
mm.
important not to get sick, but at the same time it hasn't been as bad. Why is the market not seeing this positivity? Some Okta researchers have said this might be the beginning of the end. Why aren't people swooping in to buy stocks?
Well, because their investors are still worried about the worst case scenario with respect to the Omicron variant. So right now, as mentioned a while ago, value turnover is low, participation is low, and this is because investors are being cautious. So they are taking a cautious stance. Investors would want to see first what's going to how this Omicron surge is going to turn out to be. Right now, yes, there's still some hope because our hospitalization is not yet that high. But I think this is what investors are monitoring right now. If our hospitalization does increase, if we see more, more positive cases being hospitalized, then that's going to cause alarm on the part of investors. Investors are not taking this lightly, given that by the end of the day, this is still COVID-19. So this is still something this is still something that can put public health at a major risk. At the same time, this is something that can also urge the government to put us under tighter social restriction measures. That's why investors are taking a cautious stance for now.
Okay, you mentioned the U.S. Fed being more hawkish here, possibly a rate hike on March. How's that going to affect the foreign fund flows, which we've seen already? Not having necessarily come back in the markets.
Well, with respect to the Federal Reserve's monetary tightening stance, if it does continue this year, then it's going to dry it. Well, as you've mentioned, we already have low participation on the part of foreign investors. If it does happen, the monetary tightening of the Federal Reserve continues, then it could further dry us up with respect to foreign funds. Because if the monetary tightening does continue, then first and foremost, it's going to make bond yields in the U.S. more attractive. So it's going to absorb, or it's going to absorb some of the remaining foreign funds here in the country. At the same time, if the tightening continues, then of course it's going to strengthen the dollar. It's going to lead to a possible depreciation of the peso. And once the peso depreciates, then it's going to discourage foreign investors
Mm-hmm.
coming here into the country. So overall, with the Federal Reserve's monetary tightening, if it continues this year, then the expectation is it's going to weaken our external position.
What are the markets hoping that the BSP does if the Fed is in this, tightening stance? Will the markets be celebrating more tightening interest rates, keeping in step with the Fed, or are we hoping that the BSP remains accommodative because it's such a difficult balance?
Well, we have for the BSP, it has to stick with its mandate. The mandate of the BSP is to make sure that our prices or the commodity prices are under control. So I believe that's what the BSP will adhere to, regardless of what the Federal Reserve would do. If Federal Reserve raises policy rates, but inflation here in the country is low, and at the same time we still need monetary support, then I believe the BSP will keep its accommodative monetary stance, and that is something that investors will appreciate. On the other hand, if the Federal Reserve does raise rates, and here in the Philippines, inflation will rise primarily due to demand side pressures, then the BSP will have to raise its policy rates as well. And by combating inflation, it's going to hurt us a bit,
Mm.
especially in the short term. But I believe it's going to be the right move, especially with respect to the long term outlook of the economy, and that is something that investors will appreciate.
Okay, let's talk about some fundraising happening. You've got Figaro today starting
Mhm.
that offer period. You've got House Stock planning to list on January 17, but analysts are mixed here. They're saying this is quite a tough period to be listing again an IPO. But on the other hand, you've got last year, despite all of the topsy turviness, having seen a record amount of fundraising in the equity space. How bullish are you? Let's kick off with Figaro on how they'll be able to raise this money despite all of these lockdowns impending, and despite the fact that the markets are very shaky.
I agree with you that yes, the market is the bearish sentiment in the market right now. It may affect our IPOs. It could affect their performance in the market, especially in their debuts or in their first days. But by the end of the day, my suggestion or my advice to investors is focus on the fundamentals. Also, let's go with the Figaro. With respect to Figaro, if you're going to look at its well, of course, to appreciate it, you'll have to look at its soul and its operating subsidiary, which is Figaro Systems, which holds the Figaro coffee shops, Angel's Pizza, as well as the Tienmas and others, and other food quick service restaurant operators. If you're going to look at Figaro Systems' financial performance, it's robust. I mean, if you're going to look at its first half 2021 financial performance, revenue has been up by more than 100% year on year. Net income has been up by more than 200% year on year. And take
Mm,
note that their first half financial performance, revenue, and net income has already exceeded their full year 2020 levels. Now, if you're going to compare them with their peers, let's say the direct competitor that we see for Figaro right now is Pizza, given Figaro's main driver is Angel's Pizza.
okay.
If you're going to compare it with Shakey's, financial performance wise, in the first half 2021, Pizza's or Shakey's revenue declined,
Mm,
whereas Figaro's surged by more than 100%. And
okay.
with respect to net margins, Figaro had a what about 14% in terms of net margins, I'm sorry, 13 to 14%,
Mm-hmm.
whereas Pizza only had 0.5%. And you compare Figaro with indirect competitors, Jollibee and Max's, with respect to revenue growth and net margins, Figaro's outperforming them. And take note as well, something that's I think it's noteworthy is in 2020, Figaro was able to post positive financial results, whereas first half and full year 2020, they were able to post positive results, whereas Pizza, Max's, and Jollibee all posted losses. So you consider the resilience
Mm,
of Figaro despite the pandemic. I believe this can be attributed to Angel's Pizza and its business model,
okay.
which is more on dependent on the deliveries, on the takeouts and the deliveries, and that's why Angel's Pizza remains strong despite the lockdowns that have occurred. So given
Mm,
the fundamentals of Figaro, I believe it's still a stock that's good to subscribe into. We just have to be cautious again, given the general market sentiment, and don't expect a quick buck or a quick return with this
okay.
one. It's going to be on more of the long term.
Okay, it's gonna take some time, but they must be
Yep.
doing something right. Their closest competitor listed pizza down by 2%
Mm.
this morning. Thank you so much for those insights, Javet and Tianko off at Phil Stocks.
You're very much welcome.
Here are the other headlines we're keeping our eyes on. NLEX plans to start construction of a 2-kilometer expressway section this year. This would be constructed between the existing Mindanao Avenue Toll Plaza and Carino Highway in Novaliches, Quezon City. NLEX Corporation also intends to start work on the third bridge at Candaba Viaduct. Meanwhile, the 8-kilometer NLEX connector that passes through Fifth Avenue or C3 Road, Espana Boulevard, all the way to Santa Mesa, Manila is targeted for completion this year.
Now, still on transport infrastructure, the MRT Line 7 is now 62% complete. In a Facebook post, DOTR Secretary Artugade noted that the delivery of brand new trains from South Korea is still ongoing. And upon completion, the MRT 7 is expected to have a passenger capacity of up to 300,000 in its first year of full operations. The 22-kilometer railway is seen to reduce travel time from North Avenue in Quezon City to San Jose del Monte, Bulacan from the current 2 to 3 hours to just 35 minutes. The 63 billion peso project is in partnership with San Miguel Corporation.
The Finance Department is optimistic that Congress will pass the Duterte administration's final tax reform package this year. Finance Secretary Sonny Dominguez says the approval of the amendments to the Public Service Act, Foreign Investments Act, and Retail Trade Liberalization Act last year bids well for the approval of the remaining tax reform packages. These include the Real Property Valuation and Assessment Reform Act, which is still pending at the committee level in the Senate, and the Passive Income and Financial Intermediary Taxation Act. The House of Representatives has already approved its version of the final tax reform package, but it remains pending at the committee level of the Senate.
Nomura says the country's economic growth is likely to lag behind the rest of the ASEAN region due to its low vaccination rates and weak fiscal support. Nomura noted in its Asia Economic Monthly Report the recent surge in COVID 19 cases that has prompted the government to put stricter restrictions in place. The low vaccination rate could hamper further reopening of the economy. The research firm adds that Typhoon Odette also caused billions in damage to crops and infrastructure, which could lead to rising food inflation. And despite the national elections this year, Nomura says government fiscal support is still weak. Nomura suggested that fiscal policy paralysis could happen due to the Supreme Court ruling that allows a bigger share of national taxes to local governments this year. Nomura expects the economy to expand 6.5% this year. This is below the government's 7 to 9% target for 2022.
Coming right up, an expert believes the Omicron-driven surge may be the tipping point for COVID-19.
More of that and other stories when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess De Los Santos.
And I'm Danny Laurel. The Omicron variant has been fueling more and more cases since its emergence last year.
Johns Hopkins' Andrew Pekosh tells Bloomberg what this increased transmission means for the world and how it affects COVID 19's evolution. Let's watch this.
Into the weekend, Andrew, even a dummy like me has figured out Omicron is not Delta, but it's something, well, there's some mystery to it. What's the biggest mystery with Omicron into this weekend?
I think really it circles around the issue of why this virus seems to be so much more transmissible. Certainly, it has mutations that can invade some of the immune responses that vaccines give you, but it really does seem like this virus is spreading better than other variants for other reasons. And right now, we don't really understand what that is, but certainly it seems like people are getting infected in conditions that previously were highly unlikely to mediate infection, and that's fueling this massive surge of cases. Transmission is something that's really difficult to study in a laboratory, but it really is one of the things that Omicron is doing fantastically better than any previous variant we've seen.
Is there a rho or a zeta after Omicron? I mean, I frankly like the geography designations that we used to do in the old days, but do you just assume there's another variant after this one?
There absolutely will be. This virus has already shown the ability to evolve, change, and respond to its new host humans. And it's now showing the ability to try to evade some of the immune responses that are coming down the line. I do firmly feel we're on a path to make this disease caused by this virus much more mild, much more contained, because we will have population immunity. We will have vaccines that are effectively knocking down severe disease, and we'll eventually have antivirals that are distributed to help limit that. So there are ways that we can control this disease, but this virus will be around for a long time, and it's looking more and more like we're going to have to deal with this like we deal with seasonal influenza.
Andy, when do we get to that point where we have enough, whether it's herd immunity or just immunity in the general population, with also the remedies, the antivirals, and the vaccines, where we can basically go back to life as it is, basically treat this like the common cold or the flu?
Well, I really do feel like this surge of Omicron cases is really going to be the tipping point, because with the massive number of cases, and let's be clear, some of the official counts are probably underestimates of the true number of cases that are out there right now because of a number of reasons. But this surge of Omicron cases is maybe what really pushes us over that border to enough immunity in the population so that transmission is limited, and therefore, the likelihood of getting infected will be a little bit lower going forward from here.
How do people avoid getting sick?
Well, it really comes down to the basic principles we've been talking about, perhaps boosted up a little bit. I'm a big believer now that people should be really thinking about wearing KN95 masks, or double masking with a surgical mask and a facial covering on top of that. I think that this increased transmission of Omicron requires people to take an even greater effort to try to limit their exposures. And again, masking is one thing. The other social distancing issues that we've talked about are important to continue to do. Do as much work as you can remotely, but when you're going into situations where you're going to be exposed to people, realize that you need to up your game in terms of the things you do to protect yourself and be wary of getting infected.
Now, back here on the home front, Octa Research Fellow Guido David is not convinced that the pandemic is nearing its end. Speaking on One News Now, David said that it's still unclear whether new variants will emerge and if the country's current vaccine rates are sufficient to fight off any future variants of concern. Meanwhile, infectious disease specialist Ronjin Solante said that getting the Omicron variant won't give the public natural immunity against COVID-19. Solante notes that we can minimize and mitigate transmission of the variant only through vaccines.
Now, despite Omicron driven surges in many countries, the World Health Organization insists that this new variant is less severe than the previous ones. Let's hear more from the WHO Science in 5.
So, Omicron, the latest variant of concern the WHO is tracking, has been detected around the world. It is efficiently transmitting, and in fact, everywhere where we have good sequencing, this variant is being detected. So, it is circulating globally at the present time. What we are seeing is a very sharp increase in case numbers. You will have noticed in the latest WHO update, almost 10 million cases reported in the last 7 days. And that's the highest number of cases we've seen to date. In the last 24 hours, it's been almost 2.5 million cases, or more than 2.5 million cases. So there are several reasons why we're seeing such a sharp increase in case numbers. First is the emergence of Omicron and the circulation of Omicron, which transmits very efficiently between people. There's a number of reasons for this. First is the mutations that it has. The virus is able to adhere to human cells more easily. It has mutations that allow it to do that. Second is that we have what is called immune escape. And this means that people can be reinfected, either from if they had a previous infection or if they've been vaccinated. Now, you have to remember vaccines are incredibly effective at preventing severe disease and death, but they don't prevent all infections and they don't prevent all onward transmission. So it is still absolutely critical to get vaccinated because it will save your life, but it doesn't prevent all infections or transmission. With regards to the severity of Omicron, we're learning more about this every day. What we understand from a number of countries and the studies that are coming from a number of countries is that your risk of developing severe disease or needing hospitalization from Omicron is less compared to Delta. That doesn't mean that it's a mild disease. It does mean, though, that if you are infected, that your chances of needing hospitalization are less. What we do know also from a number of countries is that your risk of developing severe disease increases with age, and that's the same as with Delta. It also increases if you have underlying conditions, and of course, it's increased if you're not vaccinated. So this is why it is so critical that when it is your turn, that you get vaccinated, that you receive the full dose, because vaccination is saving lives. Vaccination is preventing people from developing severe disease as well as going on to dying, and that's true for Delta as well as for Omicron.
And that's a first look into the business day this Monday, January 10th, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.